Hey guys, it is Julie here with TipRanks, and today we're taking a look at two stocks that score a perfect 10 out of 10. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two stocks that score a 10 on the TipRanks Smart Score. Now this is a score based on 8 unique factors that help measure a stock's likelihood to outperform the overall market. And on top of this perfect 10 score, these two companies also come in with a strong buy consensus from analysts. Now, just before we get into these two stocks, I did want to take a quick moment to acknowledge that today is 9/11, so make sure you take a moment from your day to remember and honor all of those lives lost and affected 22 years ago. Now, with that being said, let's get right into these two stocks. First on our list today, we're taking a look at Radnet. They trade under the ticker RDNT, currently priced just above $30 per share. This stock has seen growth of nearly 35% over the past year and has climbed 29% in the last 6 months. Their 10 out of 10 Smart Score comes with bullish blogger sentiment, an increase in hedge fund activity, and positive technicals and momentum. Radnet is in the healthcare industry. They are the US's largest independent provider of outpatient imaging services. The company offers diagnostic imaging services through a network of 357 outpatient clinics across 7 states. Radnet's services include a wide range of radiological imaging solutions, including cloud-based tech to manage the medical imaging workflow and diagnostic imaging at all levels. The company offers the highest quality in imaging services ranging from bone scans, digital mammography, and MRIs, giving providers and patients access to the latest in advanced equipment with competitive pricing to bring value for the dollar. TipRanks did just launch a new feature with the Ownership tab, so let's take a look for Radnet. From the Ownership tab here on the left, we can see the breakdown of the owners of Radnet. 15% is owned by insiders, 45% by institutional investors, over 12% by mutual funds, and nearly 27% by public companies and individual investors. Down below, we can see a list of the top shareholders here as well. This includes an insider and other institutions like iShares, Vanguard, and Spider. Radnet did just share their latest earnings report about a month ago on August 8th. They did come out with an earnings beat, and this broke a string of earnings misses, plus they had a quarterly record for revenue. They reported revenue of $403.7 million, and this grew 14% year over year. On the earnings side, they came in at 12 cents per share, which was a 5-cent beat from analyst expectations. Their stock currently has 4 analyst ratings, one of those coming from 5-star analyst David McDonald from Truist. He noted that the company has a high degree of geographic density in its key markets, which we think provides attractive benefits, and we view Radnet's broad multimodality suite of capabilities as positioning the company well to be an attractive partner for radiology groups, hospitals, and health systems. He does give the stock a buy rating, and so do all 3 other analysts as well. Their unanimous buy comes with a price target of $39.50. That would be an upside potential of nearly 31% from current prices. Down below, we can see our recent ratings, including David's here, with an upside of 32%, which is pretty much the norm here besides one other rating down at 26%. Our second 10 out of 10 stock is PDD Holdings. Their stock trades under the ticker PDD, currently priced at $96.91 per share. Their stock has seen growth of 33% over the past year and recently took a jump up, growing 25% in the last 3 months. Their 10 out of 10 TipRanks Smart Score does come with some notably increased hedge fund activity, positive crowd wisdom, and bullish blogger sentiment. PDD Holdings is the parent company of leading Chinese e-commerce platform Pinduoduo and global online marketplace Temu. They work to link people and local companies into the digital marketplace so that everyone can reap the benefits of high productivity and growing opportunities. Through their leading company, Pinduoduo, they reach over 900 million users, and they have an especially strong reach into the agricultural sector. The company has worked with over 16 million farmers and farming communities, bringing them into closer alignment with the digital world. They have an extensive network of sourcing, logistics, and fulfillment capabilities to support their component business. They reported their latest earnings on August 28th, and that is the reason behind that recent big jump up there, as they came out with a pretty notable earnings beat and big year-over-year increase to revenue. And I apologize, I actually mean August 29th. They reported a Q2 earnings per share of $1.43, crushing the estimates of 99 cents per share. And on the revenue side, they reported $7.45 billion. That grew 57% year over year and came in over $1 billion ahead of estimates. Following this earnings report, we did have one 5-star analyst from Benchmarking Company increase their price target. Jiang increased their price target following this blowout Q2 report. They attributed the outsized growth to the resilient and improving consumer demand on value-for-money products and the benefits of Pinduoduo's strategic investments, arguing that the improving growth outlook upon solid execution is undeniable, and they raised their fiscal 2023 and 2024 estimates accordingly. The Pinduoduo stock is currently rated a strong buy with 13 current analyst ratings, and that breaks down to 12 buys and just one hold. The average price target comes in above $121 per share, which would be an upside potential of over 25% for this next year. Down below, we can see our detailed list of analyst ratings. On the low end, we do have a hold with a pretty much flat price target, and then a lot ranging in that 10 to 30% upside. On the high end, we do have our benchmark company price target here with an upside of nearly 47%, and there are a couple of those. So there we have two strong buy stocks, both coming in with 10 out of 10 scores on the TipRanks Smart Score. Let me know your thoughts on these two companies in the comments down below and what you think about their future growth potential. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, just providing some information and entertainment, so please make sure you always do your own research and due diligence and stick to your own investing plan. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.